everybody. Welcome to Zoom at 8. My name is Julianne Peterson, and I'm a Senior Director at Old Capital Lending. We are a premier provider of debt for multifamily, but we also do other asset classes. We close about $1.2 billion a year. And, we really are specialists in multifamily. We got started about 36 years ago. And got started in Texas, Dallas. Most of our business started in Dallas, but now we go nationwide. So if you're working on something in any nationwide market, I would love to have the opportunity to provide the debt. We do bank, so recourse. We do bridge, both recourse and non-recourse. We do agency, that's your Fannie and Freddie. This is the gold standard in multifamily, and then CMBS, securitized mortgage-backed securities. So if any of those that maybe you're looking at that you need some assistance on, I would love to have the opportunity. We have closed now 9 deals here with Zoom at 8, and we're looking for number 10. We're looking for anybody that can either be an investor, or we're looking for sponsors, or we're looking for vendors. We have a lot to offer here at Zoom at 8. And if you have friends, bring them along. We've been doing this almost for 3 years, every Tuesday night. So it's pretty cool. So I am super pleased to have with us Badri, who's going to be with us tonight. He's the co-founder and VP at Avestor Incorporated. It is a real estate investment technology platform that allows investors to build custom real estate portfolios. Badri has extensive investment experience spanning a large variety of assets, including real estate, stocks and bonds, cryptocurrencies, commodities, options, and angel investing. He has co-founded 2 startups and has extensive management experience leading large teams at a Fortune 500 company. He has an MBA in marketing and finance and a master's in computer science. He resides in the beautiful city of Portland, Oregon, and I'm super excited to have him here. Badri always is at Zoom at 8, and he's been waiting diligently to get on the schedule, and we are excited to have him here tonight. Badri, welcome. How are you?
Hey, excited as always, Julie, and even more excited today. So I'm jumping up and down right now.
I see it. Before we get started, everybody, let's give Badri all of our attention. If you would go up to the right-hand side of your Zoom, it says View, switch it to Speaker, and there you see Badri's beautiful face. At least he's on mine. And I want Badri to tell us all about his product, what he's been working on, and how you might be able to utilize his services and his platform to increase your business. So I'm switching it over to you, Badri. You're in charge.
All right. Can everyone see my screen?
Yep.
Excellent. Hey, so let's see. I'll try to get through this in about a half an hour. It's almost 5:30. So let's say 35 minutes, depending on how many questions I get. So
you're good to go.
And good evening, everyone. Basically, there are 2 aspects to Avestor. One is from a sponsor or a real estate syndicator or a capital raiser perspective, and one is from a passive investor perspective. Obviously, there is some overlap. So I'll start with the sponsors, I know, but there are some passive investors too. And who knows, sometimes syndicators do invest as a passive investor in other deals, right? So I'll try to provide both perspectives. And really excited to be here with at Zoom at 8. Thank you, Julie. So
you're welcome. Hey, do you want to put this on your presenter mode?
You want me to do that? Okay.
It just probably will look nicer. We don't have to see the stuff on the left-hand side, whatever.
Sometimes I scan between slides.
Gotcha. Okay, you're in charge. I'm going to leave you alone then.
Okay. All right. No worries.
Perfect.
Because sometimes I scan through, So just some basic legal stuff, especially because a portion of this is for investors. Real estate investment is not necessarily for everyone. The fund which I'm talking about is only for accredited investors. There is a certain degree of risk associated with real estate. and it's considered an illiquid investment, and you really should consult your own investment advisor. My attorney says I have to go through that if I'm speaking about investors. So, okay, let's kind of get started. Gosh, lots of words on the slide, but if you're a sponsor or an entrepreneur, a real estate syndicator, or a capital raiser looking to expand your business, I want to ask you a few questions. Are you interested in an evergreen fund model where you can raise capital continuously from your investors independent of a deal? I mean, you don't want to wait until you have a deal. I mean, sometimes if you pop up every 9 months and say, hey, I have a latest deal, give me your money, the investor may already have gone to another syndicator, right? Are you interested in adding a new additional stable revenue stream, which is a fund management revenue stream, in addition to your asset management revenue stream and your property management revenue stream and whatever other real estate backend promotes and whatever else you have? Are you looking to add a fund without disrupting your existing syndication model? I mean, syndications have been the way a lot of people do business. And how about an end-to-end solution that covers fund formation, legal filings, investor accreditation, accounting, tax support? Does that sound good to you? And are you interested in providing investors alternate investment options when your GP flow is slow? Hey, it's a hot market out there, folks. I mean, you don't want to rush after and be the last man standing there or last woman standing. How about you make money from investing in other deals as an LP and still make some money? And how about the ability to backfill a deal? Exactly like what Jim is doing and Jim and Julie are doing, where you want to close a deal, it's a good deal, but you don't want to tie up all your money in the deal, but you still want to get a pro rata share of your earnings, and you also want a pro rata share of the capital gains. If your money was tied up for 6 months out of 5 years, you want your cut. I mean, you don't want your money to be not earning for you. And do you want to reach a new investor base without spending a significant amount on marketing? Okay, if the answer is yes to at least 2 or 3 of these questions, then I think you'll find what I have to say interesting. This is for the sponsors. I told you I'm going to be Dr. Jekyll and Dr. Hyde. I'm also talking to the investors in the audience here. Are you looking to diversify away from the stock market and build a passive investment stream? I mean, that applies to half the people. I mean, everybody is in this audience is probably going to do that. Are you looking to build a diversified real estate portfolio that spans multiple states and multiple asset classes, even though you don't have a lot of money? Do you want a lower minimum per deal and not have to invest upwards of $50,000 per deal? And do you want to get a single tax document? The only people who are, my thanks to all the accountants in the audience, but the only people who are happy to get 10, 15 tax documents are the accountants, honestly. So. And do you want the ability to invest a smaller amount every month instead of putting 50K every year? So if the answer to this is yes, at least for 2 or 3 questions, then you'll find the investor presentation interesting. Okay. And if you're an investor, imagine if you could invest across all asset classes of real estate: vacation home, self-storage, assisted living, land development, mobile home parks, student housing, office, hotel, retails, multifamily, and Airbnbs. How would you like to do that all in one platform? Well, stay tuned. So let me start with the overview for sponsors. So what is Avestor? Avestor is a one-of-a-kind platform which brings together accredited investors, truth be told, also non-accredited investors, but our focus is on accredited investors, sponsors with a new type of fund called a customizable fund. Now, I'm going to go out on the ledge and say we are the only company in the world which provides something called a customizable fund. A customizable fund is more like a buffet where your investors can come and pick and choose a deal. Whereas today, a blind pool fund is more like a pie where the ingredients are already filled in and you get a big, medium, or thin slice based on how much you invest. So it's very different than a blind pool fund which exists in the industry. So some of you have seen this presentation before. I apologize. It's the same presentation. There are some tweaks at the end. So what we are trying to do is combine the best attributes of syndications and funds. We are not trying to replace the syndication model. We are trying to augment it. So with a customizable fund, you can customize minimums by deal. You can customize fees by investor. You don't want to ask your grandma to pay you high fees. You want to give them a break, or you don't want to give that. You want to give a break to that high roller who's willing to invest $500,000 or $1 million with you. You can put the entire asset in the fund, or you can put the fund. The fund can invest as an LP in the asset. Think of this as bringing the Fidelity or Robinhood type of experience to real estate. So today, if you log into a fund management software, all you will see is how the overall fund is doing. Whereas if you log into Avestor, you'll see how each individual slice is doing, just like you would see how each individual stock is doing if you log into your stock brokerage account. Yeah. So what are the investors the Avestor helps you target? This is information from the Federal Reserve, pretty recent. I don't know if they have a later version. There are about 13 million accredited investors with a net worth of $1 to $10 million. Okay. I'm not saying we won't take money for anybody who's got more than 10 million, but they have a lot of options. So you as a sponsor, most of the sponsors are all fighting in the red ocean, where all of you are competing after the same 200,000 investors who are willing to put 50 or 100K per deal. But what we are trying to say is there are more than 12 million investors who are willing to put $50,000 or $100,000 in a fund, but they don't want to put, they want a diversified portfolio. They may want 5 or 10 or 15 grand per deal. I mean, they want multiple asset classes, multiple states. They don't want to put all the money in one little fund, in one little deal. So how does this work? You bring your deals to a fund which you create on the platform. And these deals can be any kind of deal. You can be a GP, you can be an LP, you can be a JV, you can be a co-GP. You cut them into slices, and the size of the slices is completely up to you. You bring your investors, and you also get exposure to investors through the Avestor platform. And we help your investors build a custom portfolio. So remember, it's one fund, but every investor in your fund has a unique custom portfolio tailored towards their risk tolerance, their money flow needs, their cash flow needs. They may have a kid going to college in 3 or 4 years, so they want all deals which exit in less than 4 years. Or they may want some cash coming in 2 years. They may want debt. They may want a variety of things. And when a deal exits, just like in a stock brokerage account, you can either withdraw the money or you can reinvest. Just as a point of reference, less than 0.5% of the money has been withdrawn in the fund we run. People just keep reinvesting. They like the fund so much, yeah? So what are the key benefits we offer to sponsors and real estate entrepreneurs? We, first of all, provide an end-to-end solution. We are not just a software platform. So don't compare us to another software platform out there. We become your true business partners. We help you with the legal entity creation, the SEC registrations, accounting, taxes. And then we are building a new recurring revenue stream, which is a fund management or wealth management revenue stream in addition to your GP or real estate revenue streams. You get a new source of accredited investors, not just from our base, but also many of your accredited investors, I believe, will convert to a fund model. And this entire solution is very, very adaptable to your business plan. We are working with people from Hunter Thompson's group. We are working with people from Bridget Pennington's group. They all have different business models. And so we adapt our platform to your business model. So what do I mean by that? You can put debt notes, syndication deals. You can do fixed interest notes. You can do any asset class. Built to rent, student housing, office. You cannot do that in a blind pool fund. What do you think? I mean, if you go to an investor and say, hey, Jane, how are you doing? I'm great. Look, I'm creating a fund. I really don't know what I'm doing. I might invest in any asset class. Why don't you give me your money? Good luck with that, right? But here, you're putting a little fund wrapper around each deal. The investor has the right to veto any deal. So they're not really investing in the fund. They're investing in one deal at a time, like a syndication deal. But we are putting a fund wrapper around all the deals which they invest in. And it's an evergreen fund. So once you create it, you never have to close it. And as I indicated before, you can do GP deals, you can do co-GP deals, you can do LP deals. And as I indicated, we are working with a variety of models. Some people take back-end promotes. Some people are doing hard money lending where they'll do loan origination fees and they're taking a little bit of the, they lend out money at 12%, but they get give the investors 10%. Just a real massive range of business models we accommodate with the single platform. Yeah. So I won't spend too much time on this, but the basic idea is we help you set up the GP entities. We give you a custom PPM, subscription agreements, automated tax calculations, fund expenses. We onboard the investors. We allocate earnings. We do ongoing data audits. Think of us as a full service company, which helps you. We become true business partners and help you run the business. Yeah. So I'm also proud to announce that we are building out our Avestor partner network. I'm biased because I'm a co-founder of this, but we truly believe this will revolutionize real estate investing and especially how real estate funds are created. So we are partnered with a nationwide bank. A lot of the banks don't create bank accounts for real estate funds. We have streamlined that entire process. You come to the Avestor platform, we take care of creating the bank account for you. We are partnering with the people who do cost segregation studies, people who provide insurance. I know some of the people in the audience are perking up. Loan providers, people who do visual design, content writers, accountants, bookkeeping, tax preparation, website design. So we are building a complete partner network where, in addition to the platform, you don't have to use it if you don't want to. We are just working with them, offering and negotiating some discounted rates for you. And we want to become your true business partner and give you a one-stop solution for all aspects of your business. So to recap, we provide a turnkey solution. Everything is handled, including the initial legal setup. It's an evergreen fund that does not have any entry or exit dates. And the good news is your investors have to sign a single set of legal documents. So they sign one legal docs. They don't have to sign for every single deal you're putting in the fund. You can do GP and LP deals. Investors can customize their portfolio and get a single K1. Great platform for IRA investors. We do background checks, accreditation checks, and we also do anti-money laundering checks. The SEC is beginning to get tighter on that. A lot of the platforms don't do AML checks. So particularly required for international investors, but highly recommended for even US investors. We have the ability to backfill your GP capital, just like Jim Biggs is doing, where, if you want to close a deal, put some of your own money, but your money is still earning for you, and you can slice that and allocate it to investors who come 6 months later, 1 year later, or even 2 years later. And the co-branded model provides exposure to other investors. So I'm going to move up to the overview for investors, but since there are two distinct presentations, there is some overlap. Why don't I take some questions? Julie, will that work?
Yeah, that sounds great. Let's open it up to, would you mind, let's close down that sharing and let's see see if they have any questions.
Sure.
If you have a question, Alan, you always have a question. What do you got?
I actually don't have a question. I know Badri really well, and I know his program really well, and I think it's awesome. And I plan on participating at some point.
Hey, fantastic. I do have a question. So Badri, we have this capital raise that we're trying to accomplish after the deal, as you mentioned. Mm-hmm. Can you kind of walk me through how that works?
I think Jim could, but I will. I don't want to put him on the spot. So the way it works is you create a fund, and then you transition a certain slice. Let's say you've invested, Julie, I know you're a high roller, so let's say you've invested $1 million in the fund. In the deal. But you don't really want to tie up $1 million in the deal. You like the deal, but maybe you decide you're going to put $300K in the fund, and you transfer $300K of that to the fund. The fund owns that now. And then investors can come and take a 10K chunk, a 20K chunk, a 50K chunk. And we keep track of the fact as investors come in and your money is tied up for, let's say, $280,000 is tied up for 2 months, $250,000 is tied up for 6 months. We do all that calculation. And while you're still the GP of the deal and the owner of the deal, you obviously get the cash distributions. But at the end of when the deal actually exits, we all hope the deal exits someday, right? We all like to get our money back. Then you get a portion of the capital gains. We prorate it. So let's say your money was tied up for 6 months out of 5 years. We prorate it and give it to you. Does that make sense?
Yeah. So now, if we have a 506C, because this is very important,
Sure.
it's you've got usually a accredited investor, 506C. So we usually see 50 to 100 minimum. How does that work when you've got 10 to 20, 30,000 if the minimum is 50 on that deal? How does that work?
That is up to you. What we recommend is you offer your investors a choice. You can put 50 or 100 in the deal directly, or put 50 or 100, it don't necessarily reduce the minimum, 50 or 100 in the fund. And then maybe you offer $10,000 or $15,000 slices in return. And then the rest of the money you invest in other deals in the fund. So if there is no point in creating the fund if the only deal you're going to put in the fund is one deal. But the idea is to give a steady stream of deals to investors and build more of a continuous relationship. So the trade-off to the investor is they have to pay whatever the fund management fee is, but in return, they get lower minimums per deal, and they're building a diversified portfolio within one fund, and they get a single tax document. And I can tell you almost every investor we talk to is sold on that idea. So
yeah, it's a lot of flexibility. Candace, what do you got?
Okay, so as a new gosh, I'm thinking investor because you just said investor.
Yeah.
So as if I bring my investors into the fund and I have to have a deal, otherwise the money doesn't go anywhere when it's in the fund. When as me bringing a deal, looking for investors to bring them into a fund, I have to have a deal on your platform, correct?
yes and no. Let me explain why. Obviously, you don't want investors. Nobody's going to be happy with you if you say, "Give me 100 or 200,000. I'll just tie it up and get back to you." And call me in a couple of years. I'll tell you where the money is. So there are a couple of choices. You can invest as a LP in another deal. So that you can, maybe in a smaller deal, maybe you do a 25K chunk and offer that to investors while you're waiting for your GP deal. Or you can also invest in hard money loans. We can tell you, and Jim and I are going to talk about this. I know he said he's interested. We buy hard money loans from other platforms and you can slice it. So you can say, hey, I'm waiting for a deal. That deal may take 6 months, but here is a hard money loan which offers between 8 to 12% for 6 months. And when the deal exits, we'll put you in an equity deal. So I'll talk more about it when I give the investor part of the presentation. So that business model is your business model. We don't give any interest on any cash balances in our fund because we offer a steady stream of deals. But if you want to even offer some small interest while you're waiting for your deal, you can do that too. It's your fund. You decide what you want to do with it.
Okay, that sounds excellent. I agree with that. Anybody else have a question before we go into limited partner? No? Okay. Badri?
Yeah.
Oh, Jim.
Yeah, I would say as an example on the country club deal, to Candace's point, you don't have to have a deal. This works whether you're a GP or an LP. So you could buy a share of country club, put it in your fund, and for your accredited investors that may not want to invest 50K, they may want to invest 25K or 30K or 10K. Then you can slice it up into smaller pieces within your fund. So that's just one of the many flexibilities inside Badri's fund.
I think I'd prefer to call it the Avestor fund, but okay, we'll call it Badri's fund. That's okay.
Vicky.
So the GOB fund.
There you go. GOP is even better.
Vicky, what do you got?
Yeah, I have a question for you, Badri. So when we're
Sure.
talking about slicing and dicing the LP investment that I got, let's say I put $100,000 in some deal as an LP. So I take it to your portal, and when you're talking about slice and dice that, maybe in the smaller chunks like 10,000 per share, that I can create 10 shares for that. So
Right.
This is going to happen after the deal is closed. My initial deal is closed, right? Is that true?
Either. So you could do it after the deal is closed and then you transfer it, which is how we run our fund. We pre-invest. We don't ask our investors. We have our own model. I'll talk about that in a minute. But you can also take soft commits. If you're a capital raiser, you can say, hey, this deal looks good. do you want to put in a 10 or 20K? And then you collect all the soft commits and then you invest in the deal. And it's a no risk option for you. You add up all the soft commits. Well, hopefully you trust the people who did the soft commit is not really soft and they're semi-hard, but and then you add up all the money and invest in the deal.
So let me ask you this. The question that came to my mind is because let's say I'm invested in a bunch of deals right now. So I wanted to start a fund on your portal. Can I, slice and dice those deals? And then I'll raise capital that way. Is it legal to do that?
I don't want to say yes to that. It depends on, you'll have to transfer the ownership of that deal to the fund. And so each deal is a little different. So I can't give you a blanket answer to any deal you've already invested in. I'm afraid we'll have to take that discussion offline. So
okay, perfect. Thank you.
Yeah. So it depends on the deal and some other legal details. So
that is an interesting question. I want to be the fly on the wall with those answers. So amazing. All right. Anybody else have a question?
All right. I talked to a lot of you, so maybe it's old news. Yeah. So.
All right, Badri, let's go. Keep going. Okay. Go ahead and get back to sharing. Good. Thank you.
Thank you. Okay. So now wait a minute. I'm back to sponsors. I don't want to be our sponsors. I want to be with investors now. So, oops, give me 1 second here. There we are. That's what I wanted to do. So from an investor's perspective, what is Avestor? Again, Avestor is a platform where we have our own fund and there are other people who help you build a custom real estate portfolio tailored towards your needs, and you get a combination of passive income and capital appreciation, and you get to choose. You may like value add. You may get, frankly, we are getting a little tired of all the deals in Texas. I mean, everything we get seems to be in Texas these days. Maybe you live in Texas. You don't want a Texas deal. So, or you may want, you really don't want to get any income now. You're already in a high income tax bracket. You're just looking for tax advantages. So all our sponsors will help you build a custom portfolio for your needs. Yeah. So what's the problem we are trying to solve? This is old news to almost everyone here. So I'll go through this fast. Everyone has their money in the stock market. You want to diversify away into alternative assets like real estate. I'm preaching to the choir. You can always do an active investment, but then you got single market risk, 25 to 30% cash down. You can invest in real estate investment trusts. I never understood that. I mean, if the whole point is to get away from the stock market, well, guess what? If you're investing in a real estate investment trust, you're not. I mean, the REITs go up and down with the stock market, and often you may not get all the benefits of the depreciation. You can do syndication deals. Trust me, I love all the syndicators in the audience. There's no problem with that. But then if you're just starting out, do you really feel comfortable putting $50,000 or $100,000 per deal? And do you have the time to find the best deals? I mean, there are so many crowdfunding platforms, CrowdStraight. Some of the deals go within minutes there, literally half an hour. Sometimes we look there, waiting to press the invest button, because those deals go really fast. So we have a solution with our own fund, but this is not just our fund. I would love to show you some of the other funds on the platform in a second and also give you a quick demo. In our fund, we evaluate and we pre-invest in the best deals. We evaluate hundreds of deals and we pre-invest in or put our own money in the best deals. And then investors can customize their portfolio with their own goals. They can invest in different states, time horizons, and asset classes. Very transparent. I'll give you a quick demo. You'll see how you're able to track the earnings in each deal, even though you're investing different amounts and it's all part of one fund. You can withdraw the money when a deal exits. And the best part is, even if you invest in 20, 25 deals, all of this is packaged in one LP structure, and all the passive income, every penny of the passive income in a pro rata fashion, of course, and all the appreciation and depreciation is passed through to you. Okay. So how does this work? Again, to recap, we research the deals, we pre-invest in the deals. This deal is cut into slices. Every investor comes along and sets their own portfolio direction. We match those slices and build a custom portfolio. And you get a pro rata share of the earnings, and the investors can withdraw the money when the deal exits, or they can reinvest. Just kind of a recap of what I already mentioned. Yeah. So here is a hypothetical example. I'm not going to spend too much time on this because I'll show you kind of a more semi-real example when I give the demo of the platform. The point is you can invest in multiple markets. You can specify a time horizon. You can say, I want only deals from 3 to 5 years. Or you can say, I want 30% of my money back in 2 years. We invest in single family, multifamily, student housing, apartment complexes, office, retail, and we are expanding our asset classes. We would love to partner with anybody out there who is willing to do a non-traditional fund. Mobile home parks, we don't have any. Farmland, we don't have any. Vineyards, we don't have any. So if I just talked to somebody who wants to create tiny homes and tents for vacation rental tents and things like that, we would love something like that. So we really want to be the platform where you can find any type of real estate investment your heart wants, and we want you to be in Avestor and invest in that. So you can see you can invest as little as $500 in debt deals and the $5,000 in different syndication deals. I'll talk about that in a second. So there are 2 types of investments we offer in our fund. I'm not going to bother explaining what a syndication deal is. I'm sure everyone in the room knows what a syndication deal is. We do both value add and new construction. We typically stick to any deal which is less than 5 years. It's just what our investors have asked. Do all the lower risk categories. And in addition, we do real estate loans where we buy loans from other platforms. These are 6 to 15 months hard money loans. We don't buy anything where we don't have the first lien on the property. 8 to 12% interest. It's a damn attractive alternative to putting your money at 0.5% in the bank, let me tell you. And relatively safer than syndication deals. So what we are trying to do is offer the stock bond experience to a real estate investor. What do you do when you go to an investment advisor? Oh, do you want 80% in stocks and 20% in bonds? We are offering that similar kind of investment experience and investment experience to a person who wants to invest in real estate. So with that, I would like to give you a quick demo and then I'll open it up for questions. So
I would love that. Let's see it all in working order. This is exciting.
Thank you. Thank you. Let me see here. Oops, I logged into our master admin. That's not what I want. You'll be able to see every single fund in the system. Let's do the demo fund. This is not a real fund, guys. It's just a demo fund. So for the sponsors in the audience, you'll get a branded portal, which is branded in your name. I know A&V doesn't look very interesting, but I'm sure you'll have far more interesting names and far more interesting than the Portland Real Estate Fund. So this is the experience which the investors, your investors will have when they log in. What do you see when you log into the Fidelity account, right? I seem to be obsessed with Fidelity. I don't know why. But you see your account balance, the number of deals. Ooh, massive return of 0% on your, that's just a demo fund. None of the funds have exited yet. That's all. This shows the return on deals which have exited, and we have not shown any deals has exited. Breakdown between debt and equity. For lack of better word, we'll call this a vanity map. It shows you how your deals are distributed across the country. You can go there and click on this and get more information. A value add apartment complex in San Antonio. I'm sure we have some friends from Texas here. And this is a liquidity graph, which tells you approximately when you'll get your money back. Being all real estate entrepreneurs, you know, it's not guaranteed. It's just a projection. It may take longer, but at least it's an estimate for you to plan. And just like you go into a stock brokerage account, you'll be able to see how each individual slice is doing. So this person has put $20,000 in this commercial debt deal, 27, and he's made 1,600 so far. Maybe let's look at an equity deal. We just haven't populated it with many deals here. Value add apartment complex in San Antonio is put 30,000. You click on this, and we are very, very transparent. Yeah. So whatever PPMs the sponsor provides and any project updates, we'll help you upload. And if you're an investor, you're able to access everything which the actual sponsor provides. And when you want to invest in a deal, it's a very simple proposition. You just go to invest. And then you will see all the deals currently available in your fund. You're not going to see all the deals in other funds. So, for example, there is this medical office deal and 15% IRR. Doesn't sound very high, but it's a rock solid, very safe. I think this is an actual deal, actually. It's sold out now, but we are still using it in the demo fund. You can click on it to get more information, and then you can press request investment, and you can say, I want to invest $10,000, and a notification goes to the sponsor, and they allocate you into the deal. It's as simple as that. So I just wanted to show a couple of things. I want to go to our website, if you don't mind. There is a lot of information for both passive investors and sponsors. Please do sign up. We do send periodic, hopefully informative emails. Let me show you some of the funds already in the platform. There's a very, very small fraction. We have more than a dozen funds already beyond this in the pipeline, and several dozen more who are talking to us. Better Capital, Bobby Sharma, some of you may know it. He really ramped up, he's almost at $5 million. He specializes in hard money lending. So basically, he takes a percentage of the interest, and he takes loan origination fees. Charlie has been here. Is Charlie here? I don't know if he's still here.
Not today. I don't think he's here today.
He's created a fund with multifamily storage, Airbnb assets. These guys are large property managers in Florida, and they do slices of vacation rentals. And all this hoopla about invest in the fund and get a discount on a vacation rental near Disneyland or Disney World. What am I saying? And Melanie, you may know. They're capital raisers, and they go to large syndicators and say, "Hey, we'll raise a couple million for you, but give us special terms." And then these guys are mostly self-storage, but they do multifamily. And this is our own fund. But really, the intent for our fund is to test out the platform. And we are not going to focus on our fund. We have not been advertising it at all. If investors come, they keep, our existing investors keep adding money. For example, the country club deal, we really didn't want to put more than 75 grand, but it sold out within 2 hours. So we had to put in another chunk. So I'm sure Jim is not complaining. So
let's get some more.
So that's the basic idea. So any questions about this? Does this make sense to you as a passive investor? I would love to get some feedback. I know many of you are sponsors, but does it resonate with you as a passive investor if you were to start with your journey as a passive investor now?
Yeah, very much so. I love how you can have it all in one place, like a dashboard. Now, Jeff had a question. If the fund has $5 million, is itself considered accredited? Oh, that's a good question.
Yeah, I know. Jim will correct me as soon as I say this now. But so in our opinion, I'm not an attorney. I don't play an attorney on TV, and I have never claimed to Old Capital that I am an attorney. So take whatever I say with a pinch of salt. Yes, the fund is accredited, considered an accredited investor, but we believe the fund can still only invest in 506c deals. So you can't get around that by saying that the fund can invest in 506D. That is our interpretation of the law. And trust me, we are on the cutting edge and we look at the law all the time. But it's better to get an attorney's thing. So if you do cross 5 million, the fund is considered accredited, yes. But I believe you still cannot invest in 506 deals.
Anybody have questions? This is a great platform, Badri. I'm so excited that you're here.
I had a question.
Sure, Wayne.
Good to see you again.
Yeah, how you doing? So I'm trying to wrap my head around how are you able to invest in a fund as an LP or GP? How does that work if you're not directly in the deal from its origin? How does that work with the fund? How are the two roles designated differently, I guess?
Okay. One role is very simple. You're an LP, you go invest in one of the funds in the Avestor platform, and then you get to choose the deals. I showed you the Ariel LP fund. There are several other funds. Mm-hmm. Instead of investing in the deal, you go invest in the fund, and then you pick and choose in the deals in the fund, okay? But I think what you're referring to is, I said, if you are a fund manager, you can invest in a deal as an LP, and then bring that deal to the fund and then slice it and allocate it to investors. I think that's what you're asking, right, Wayne?
Well, yeah, you said you could be an LP or a GP. So I'm just trying to find out how do you do that with the fund? What's the distinction when investing as one or the other?
The distinction is you are always the GP of the fund, but you're not the GP of the deal. As a GP of the fund, we create two entities. One is the fund LLC and one is the GP LLC. You're a partner in the GP LLC. So let's you go like Jim's deal. What is not to like? 12% preferred, and you put 100K. Make it 200K. Why stick to 100K? And then you take the 200K, and then you make the fund LLC the owner of the 200K. And then investors come along and you slice it. I wouldn't use the word sell. You're reallocating. That's the technical legal word. And we have checked it with all attorneys, some of the top hedge fund attorneys in the country. So I'm not trying to give you advice which has not been vetted by attorneys. And then you start slicing it and allocating it. So.
Okay. All right. Yeah, that clears it up a little bit. Thanks a lot.
Sure. Of course.
So I have a follow-up question, Badri, on that. So when you're slicing that deal, are you giving the same returns or is there a change in returns? Because if you're giving them the same returns which you're getting as an LP, where you're making the money then?
Excellent question. That's up to you. You're the fund manager. So we are talking to a very large fund manager in Puerto Rico, where he is not giving all the deal returns to who shall remain unnamed right now. He's not giving all the returns to, he's building a model. That's where I said we can accommodate whatever business model you want. So you get to say, hey, if it is 12% return, I get to keep 2%. Or you can say anything about 12%, you get a performance fee where you take 20% of the anything about 12. It's whatever you want to do. From our fund, because our intent was not to make a lot of money from our fund, every penny which we get, we flow through. And the only money we make is we charge a simple 1 to 1.25% fund management fee. We don't want to make a lot of money from the fund, but if you create your own fund, you can choose whatever you want. Did that answer your question?
Yeah, it does. But I was just wondering, is it illegal to do it? Like you're investing somewhere and then you're paying less to the investors, like one investment and then other investment on top of that layers.
As long as you disclose it. Yeah, as long as you disclose it, be a full disclosure should be there. But as long as you disclose it and say, for running the fund, I'm taking this performance fee, it's perfectly okay. Not only is it legal, we have several funds who are building that business model. Some of these models are, in people like Hunter Thompson's group. There are few race masters who are coming. They seem to have standard platforms, and one guy came and said, hey, this is the model. This model looks very similar to the other guy's model. Oh, wait, you're both part of race masters. Okay, that makes sense.
Interesting. All right, let's take one more because we need to get on to our networking. Does anybody have any information? And if you get into a room with Badri, you certainly can ask that question.
I did type in my chat info. I'll retype it. So would love to hear from you. Feedback is fine. You don't have to create a fund. You don't have to invest. Just give us feedback, positive and negative. I'm not going to bite your head off.
Oh, that's good. We need everybody stay healthy.
There you go.
Anybody else? What an amazing product that you've developed. You should be very proud of this.
Thank you. Thank you. We are beginning to do a VC round, and we are also doing a small angel round. I'll conclude with that. A lot of VC interest. We want to play the VCs against each other. Why not, right? I mean, they make enough money. And let's see. We hope to build this into $1 billion company. With your help and with Julie's help.
There you go. Jesse asked, how do you compare it to Appfolio? Although Appfolio is not a fund.
Right.
But the CRM more importantly.
Yeah. So if you look at all the players in the space, there are 3 categories. Sorry, this will take about 30 seconds, Julie.
Okay, thank you.
There is investment management software, Appfolio, Syndication Pro, Juniper. I mean, there are a lot of software out there. There is fund management software, and there are fund administration companies, and then there are marketplaces. Okay. Anyone give me an example of a marketplace? What's a marketplace?
CrowdStreet.
CrowdStreet. Thank you, Jim. And I didn't pay Jim anything. He's doing it out of his own free will. So CrowdStreet is an example of a marketplace. I'm not commenting on anything. I'm just giving examples. I'm not recommending anything. Investment software, there are plenty. Cashflow Portal, Syndication Pro. And then fund software like Juniper Square, IMS. And then there are fund administrators who help you run the fund. Guess what we do?
All of them.
All of them. Thank you. So we are trying to play in that space where we are really spanning all of that. And we believe we are in a unique space. And I don't know how long we'll be unique. Maybe somebody will copy us. But we're running fast, and trying to stay ahead of anybody else who's trying to get to us. So Veravest
would be maybe one of your competitions, right?
They do a little bit of the fund administration, and they do a little bit of the investment management. But the difference is they don't have a marketplace.
Yeah.
And also the difference is we really truly become business partners. And they do SPVs. They do not do customizable funds. Great people, don't get me wrong. But we are the only platform in the world which does a customizable fund. What is a customizable fund, you ask? I hope you don't after listening to the presentation, but I will answer it. It's the ability to pick and choose how much you want to invest in each deal as opposed to a blind deal. And by the way, we also support SPVs. If you don't believe in the customizable fund model, SPVs are a lot less expensive. If you want to try out Avestor, and what is an SPV? It's a single purpose vehicle fund where you invest only in one fund. We believe a customizable fund is much better than SPV. But if you want a SPV, come to Avestor. We support SPVs as well.
So real quickly, what does something like this cost? How do you price this out?
Okay. So we have a setup fee. I would like to get into details individually as opposed to in a recorded podcast.
Yeah.
And then we have relationships with various attorneys, and we have negotiated discounted rates, and you pay the negotiated discounted rate directly to the attorney. And then we take a portion of your fund management fee. And as you scale, our fees go down too. So we are not, so we want to scale with you. We want to become your true business partners. And we take a portion of your fund management fee. We recommend you charge between 1.5% to 2%, and we take a portion of that. And I can tell you, no investor has complained, not one, because they like the value proposition of smaller amounts per deal. They like the ability to pick and choose. It's almost becomes a little Robin Hood type of, hey, look, I'm investing in this deal and I'm getting to choose, as opposed to somebody telling me you have to invest in this deal. So.
Fantastic. Jim, real quickly, what do you got?
Just wanted to ask Badri, if I was lucky enough to get into that initial round, could I then put that back into the fund and sell it to other people here at Zoom at 8?
You mean the angel investment?
Yes.
So we have bigger plans beyond real estate. I was not planning to share those plans. Our stage 3 is we want to create the fund for startups. We want to create the funds for crypto. We want to create the funds for all alternative investments, but run, walk, and then, no, what is it? Sorry, crawl, walk, and run. We are crawling right now. We'll walk later, and then we'll run. So the short answer is we are talking to a couple of people who want to create a startup fund, but that's not our primary focus, where you can actually invest in startups. And Jim, thank you for your angel investment. We would love to have someone of your caliber. And if anybody else wants to do an angel investment too, please reach out to me. So.
Well,
those funds, I'm sorry.
Go ahead. That's Jeffrey.
Yes. On those funds, can you do like a restaurant fund? I know you talked about like startup and business, but could you do like that for restaurants? Like,
I can't say yes. I don't see why not. The entire technology has been built to adapt to a wide range of products. Right now, we are focused on real estate, but we probably will do one pilot in startups. Probably not a pilot in crypto. That's it's a wild west. We don't want to get into that quite yet. We will eventually. And when you say restaurant, do you mean selling a slice of the restaurant business, or is it the restaurant real estate? But talk to me offline. I don't see why not.
Okay. That sounds good. Look forward to it. Thank you.
Yeah.
All right. Well, everybody, Badri has been so wonderful to share his contact information. And, he is true. He is available. He's interested to hear your comments. He uses that in order to advance and make changes. So, if you have something that will help him, I would jump on a call with him to improve his product, and hopefully, you will find him very approachable, and he's super nice to be working with. So, Badri, thanks a lot for joining us tonight.
I appreciate the opportunity. Great group of people.